So close your eyes for a second and just picture a traditional manufacturing plant. What immediately comes to mind?
Oh, probably a lot of noise.
Right, yeah.
Hmm.
You're probably hearing the rhythmic, deafening thud of heavy stamping machinery, right? You're picturing managers walking the concrete floor, holding physical clipboards, checking off pallets of inventory by hand, and then somewhere in a quiet, artificially lit, windowless office, you have an accounting department.
Usually far away from the actual floor.
Exactly. Completely isolated from the chaos of the factory, just staring at static spreadsheets. And completely separated from them, you have the inventory managers. They're siloed off in their own warehouse, desperately trying to figure out where a delayed shipment of raw materials, actually ended. It's this massive segmented beast where the left hand rarely knows what the right hand is doing in real time.
Yeah, it's the classic industrial image. And I mean, for a startling number of facilities around the world, it is still the day-to-day reality. Information moves incredibly slowly in those environments. Data is usually processed in batches at the end of the week or even the month,
Wow, yeah.
and almost always after the fact. So the factory is essentially operating on this historical delay.
Well, today we are diving into a stack of briefing materials on something that shatters that old image completely. We are looking at the APS ecosystem, specifically focusing on their manufacturing, accounting, and stock control framework. And our mission for this deep dive is to explore how this system takes raw manufacturing, global supply chain logistics, artificial intelligence, and localized legal compliance, and just fuses them all together into a single, breathing, neural business ecosystem.
That phrase is so interesting.
Right. That phrase, neural business ecosystem, it really stuck out to me because it implies something living.
Well, the terminology is very deliberate. I mean, if you think about how a biological nervous system works, it's all about immediate, interconnected response.
Mhm.
So if you accidentally touch a hot stove, your finger doesn't send the memo to a middle manager located in your elbow,
Right.
who then waits for an end-of-month review to tell your brain to pull your hand away.
That would be disastrous.
Exactly. The reaction is instantaneous. The sensory input at the extremity instantly triggers a reaction from the whole organism. And that is the exact paradigm shift we are talking about here for modern manufacturing.
The analogy I kept coming back to while going through the briefs is the evolution of car safety. Traditional manufacturing software is basically a car's rearview mirror. It's a really detailed, high-resolution mirror. Sure, it tells you exactly what you just drove past, what you already hit, what your profits were last month.
Yeah.
But this APS neural ecosystem acts more like a self-driving car's sensor array. It's like LiDAR. It's constantly pinging, reacting in real time, and adjusting the steering before you even realize there's a pothole in the road ahead.
I like that. And for anyone listening, whether you are actively managing a supply chain, running a business, or you're just fascinated by where industrial technology is heading, understanding this shift from static, backward-looking software to proactive, AI-driven ecosystems is absolutely crucial.
Definitely.
This isn't just a cosmetic software upgrade. It's a fundamental change in how production facilities survive, adapt, and compete in a really volatile global market.
So let's unpack the mechanics of this, starting where it actually matters, which is the factory floor. Because before any business can track its global sales or run fancy AI analytics, it has to physically build a product.
Right.
The foundational blueprint in this ecosystem is the multi-level BM, or bill of materials. But it's fundamentally different from the parts list you get when you buy flat pack furniture.
Oh, totally. Because if you were manufacturing, say, a custom dining room table, a standard bill of materials might just list, wood, brackets, and screws.
Keep it simple.
Right. But a multi-level BOM in the APS system links every single raw material to semi-finished goods and then to the final product with excruciating precision. We are talking about tracking exact weights, dimensions, and the specific physical properties of every single component down to the millimeter.
So it's not a flat list. It's more of a living tree of parts.
Exactly. And within that tree, the system utilizes dynamic categorization. Products are fluidly classified based on exactly where they are in their life cycle.
How does that work in practice?
Well, say a piece of raw oak arrives at the loading dock. The system knows it is a raw material. After it's cut, shaped, and sanded on the floor, it shifts categories entirely to become a semi-finished good.
Okay.
Once it's assembled with the metal brackets and varnished, it becomes a finished good or a commercial good ready for sale. So the ecosystem understands exactly what state the matter is in at any given second on the factory floor.
And the system tracks that entire conversion journey through production orders. What blew my mind in the sources was how it handles the financial side of that journey. It isn't just tracking the physical location of the wood. As that table moves down the assembly line, the system is automatically embedding the labor costs, the machine operating costs, and even direct and indirect overheads directly into the final product's profile.
And this is the critical transition from just building a product to actually protecting the profit. Because in traditional manufacturing, figuring out the true comprehensive cost of a product is a logistical nightmare.
Right.
You might not actually know your true profit margin until the accountants close the books at the end of the quarter.
And by then, the damage is already done if you've been underpricing.
Exactly. The standout feature of this ecosystem is the real-time, instantaneous recalculation of product costs.
I want to dig into how instantaneous that actually is, because global supply chains are chaotic right now. Prices are moving constantly.
We're talking about milliseconds here. So let's say your supplier in another country suddenly raises the price of the specialized steel you use for your table legs.
Okay.
The moment that new purchase invoice is entered into the system at the loading dock, the APS ecosystem uses a weighted average formula to immediately recalculate the baseline cost of every single finished table sitting in your warehouse, as well as the ones currently being built on the floor.
Oh, wow. So it catches the ripple effect immediately.
Yes.
But it doesn't just calculate the new cost and leave you to figure out what to do next. The system actually has an automatic pricing strategy built in, right?
Yeah.
You can tell it, hey, I always need to make a 25% profit margin on these tables to keep the lights on. If the cost of that steel jumps, the ecosystem automatically raises the final retail or wholesale sale price of your tables across all your sales channels to protect that specific 25% margin.
It utilizes something called a safety floor.
A safety floor.
Yeah, this is a hard-coded limit that ensures no salesperson trying to hit a quota and no automated discount campaign can ever sell that product at a price that destroys your profitability.
Interesting.
The floor moves up automatically as the raw materials get more expensive. Add in the scrap control module, where the system precisely tracks the financial value of the metal shavings or wood offcuts that end up on the floor during manufacturing, and your costing is accurate down to the literal penny.
I have to push back here, though. Let's imagine I'm running this factory. If my final retail prices are automatically shifting every time a supplier sneezes and changes their raw material cost by a few cents, doesn't that risk totally alienating my customers? I mean, people rely on predictable pricing.
Sure.
How does this automatic price hike and the safety floor actually play out in a real-world market without causing absolute chaos for the sales team?
It's a great question. Think of the safety floor like the autopilot on a commercial jet. It's not designed to suddenly dive the plane to avoid a single bird tossing all the passengers around in the cabin, right?
Right, that would be terrible.
This system allows you, the human operator, to define a tolerance band. So you might tell the system to silently absorb up to a, say, 3% cost increase without changing the external retail price. So the customer never feels the daily turbulence of the supply chain.
Oh, I see. So the system manages the micro fluctuations in the background.
Exactly. But if a macroeconomic event happens, say a massive supply chain bottleneck in a major shipping canal, spikes steel prices by 40% overnight.
Which happens.
It does. The system instantly locks the safety floor. It prevents your sales team from unknowingly fulfilling massive wholesale orders at the old, outdated price. Because fulfilling orders at that old price would mean you are effectively paying your customers to take your tables.
Yeah, you'd go bankrupt.
Right. So the mechanism balances market stability for the customer with margin protection for the factory. You don't accidentally manufacture your way into bankruptcy just because your cost data was 30 days out of date.
That makes a lot of sense. But, you can calculate costs to the micropenny all day long, but this entire real-time costing model completely falls apart if your initial physical inventory count is wrong.
Oh, absolutely.
If the digital ledger thinks you have 100 tons of steel and you only actually have 80, the automatic pricing is going to crash the plane. So how does this ecosystem guarantee the physical stock actually matches the digital ledger?
Well, bridging that physical-digital divide is traditionally where things get messy. Tracking the intake and auditing of materials is labor-intensive, it's prone to human error, but APS introduces a mechanism here that relies on next-gen auditing.
The AR stock taking.
Yes.
Augmented reality smart glasses. The sources detail how a warehouse worker can walk down the aisles wearing hardware like RealWear or Vuzix or Google Glass for completely hands-free inventory counting. And honestly, I was laughing thinking about a veteran warehouse worker who has been using a clipboard for 30 years, suddenly strapping on a heads-up display.
It is quite the visual.
It's like having Terminator vision. But instead of scanning a crowd looking for a target, you're hunting for a missing pallet of steel cogs.
I mean, the learning curve might be an initial hurdle for some workers, sure, but the leap in efficiency is staggering.
Yeah.
The cameras mounted on the AR glasses are continuously scanning barcodes, QR codes, and lot numbers as the worker simply looks at the shelves.
Just by looking.
Yeah, they don't have to pick up a scanner and individually zap every single box.
And the worker gets continuous audio feedback, right? And a visual heads-up display layered over their real-world vision. So they see a real-time comparison between what they are physically looking at and what the digital ledger expects to be there.
Right.
If the system expects 10 boxes and the camera sees 12, the worker sees a green indicator for the surplus. If it expects 10 and only sees 8, a red indicator flashes for the deficit.
But the crucial part is what happens next. Because the ecosystem doesn't just blindly accept that variance and immediately write it off the books. There's an intermediary step called a variance simulation.
A simulation.
Yeah. Before the warehouse manager locks in that discrepancy and officially declares the parts missing or surplus, the ecosystem runs a full simulation of how that specific variance will impact the final financial statements and the tax liabilities for that quarter.
Wait, really? So if I lose a pallet of highly specialized microchips, the system instantly calculates the exact hit to my profit and loss statement and how it alters my upcoming tax bill before I even hit confirm on the missing inventory.
Exactly. Because management needs to know the financial weight of the discrepancy immediately so they can decide how many resources to deploy to find it. I mean, a missing box of cheap screws means virtually nothing to the bottom line, right? You just write it off.
Sure.
But a missing pallet of high-end microprocessors could trigger a massive financial event. The simulation tells you exactly how much panic is appropriate.
That is so smart. And this level of granular tracking extends way beyond the four walls of the warehouse, too. The source materials emphasize traceability and global trade, specifically lot tracking that adheres to FDA and ISO 9001 standards.
Yeah, and those standards are non-negotiable in modern manufacturing. I mean, if you were building medical devices, processing food, or manufacturing automotive safety components, you need to be able to trace a defective product back through its semi-finished stage, back to the exact batch of raw material, and back to the specific shipping container it arrived in from a foreign supplier 3 months ago.
And dealing with those foreign suppliers brings in a whole other layer of complexity. The export and international trade module in the system supports 7 different foreign currencies. It generates commercial invoices instantly and tracks all the logistics, like shipping containers, seal numbers, HS codes.
And for those unfamiliar, HS codes, or harmonized system codes, are the standardized numerical methods used globally to classify traded products. Customs authorities use them to identify products and apply the correct taxes and duties. If your HS codes are wrong, your shipment just gets stuck at the border indefinitely.
Right. And the system also tracks Inca terms.
Yes. Inca terms, like FOBI, which is free on board, or EXW, X-Works, are the universal trade terms that dictate exactly who assumes the financial risk and the shipping costs at different stages of the international journey. And dealing with the fallout of those terms is traditionally a massive headache for the accounting department.
Because of the landed costs, right?
Because this is something called landed costs, yes.
I was hoping we could unpack landed costs because reading about the math behind it, it sounds like a nightmare to do manually.
Oh, it is. Let's use a concrete example. Say you import a massive shipping container full of different raw materials. You've got some heavy steel, some lightweight aluminum, some delicate electronics. You have the baseline cost of the goods themselves.
Right, what you paid the supplier.
Exactly. But then you receive a secondary bill for customs duties, another for ocean freight charges, another for marine insurance, and another for port handling fees. A traditional accountant has to sit down and figure out how to divide all those extra thousands of dollars in bills among the thousands of individual, wildly different parts in that container to figure out their true cost to the factory.
Yeah, and you can't just divide a $5,000 freight bill evenly by the number of items because a tiny microchip shouldn't absorb the same freight cost as a 100-pound steel beam.
Exactly. The APS ecosystem automates the distribution of these landed costs. It can slice up that $5,000 freight bill and distribute it mathematically across the imported items based on their specific weight, their volume, or their value. So it instantly gives you the true fully landed cost of the raw material the second it hits your receiving dock.
Which, following in the neural network logic we talked about, instantly updates the multi-level BOM, which updates the real-time costing, which checks the safety floor, which adjusts the retail price. You can really see the nervous system analogy firing on all cylinders here.
You really can.
Mm.
But the challenge, however, is the sheer volume of information. If you are tracking thousands of raw materials, global shipping logistics, complex landed costs, and dynamic factory overheads every single minute, that generates a mountain of data.
Yeah, humans can't process that.
A human workforce would simply drown in it, trying to spot trends.
So to make sense of all this data proactively, without burning out the human workforce, the ecosystem relies on a built-in AI brain. They call it the AI Financial Guardian. And essentially acts like a digital watchdog, right? It's constantly scanning thousands of microtransactions in the background, looking for unnatural spikes or anomalies.
Yeah, so if a specific overhead expense, say the electricity bill for the stamping press department, suddenly jumps by 20% compared to its historical baseline for this time of year, the AI flags it immediately.
But doesn't wait for a quarterly review.
No, it doesn't wait for a human auditor to notice the discrepancy 3 months later. It catches duplicate vendor invoices before the accounts payable team actually cuts a check.
It also handles cash flow forecasting. It analyzes the historical financial behavior of your clients. So it knows that client A always pays their invoices 15 days late, while client B is reliable and always pays early. It uses that historical behavioral data combined with your supplier payment schedules to predict the factory's future liquidity.
Which is huge.
It can literally warn you if you're going to run out of cash to make payroll next month.
And that kind of predictive power is the difference between a factory staying open or closing its doors. But the AI isn't just a defensive watchdog. It's also a highly advanced reporting tool designed to remove technical barriers.
Like the AI report builder. That uses natural language processing,
Mm-hmm.
which is so cool because you don't have to know how to code SQL queries, which is the programming language normally used to communicate with databases, or know how to build complex pivot tables. A factory manager can just pull up the interface and literally type in plain English or Arabic, what are the top 5 most profitable items this month considering landed costs?
And the system just translates that conversational language into a complex database query, pulls the real-time data across all those interconnected modules, and instantly generates the analysis and the visual charts.
It's incredible. And it also uses OCR, optical character recognition. If you receive a crumpled physical paper invoice from a local vendor, you just scan it. The AI reads the image, extracts the vendor name, the line item amounts, the taxes, and automatically creates a GAP, or IFRS-compliant double-entry journal log.
And just to clarify those terms, GAAP and IFRS are the standard accounting frameworks used globally to ensure financial reporting is consistent and transparent. The system ensures the data it extracts automatically conforms to those strict global rules. It even handles auto cost allocation,
Oh, right.
taking general administrative expenses like the internet bill for the front office and mathematically spreading them across the manufacturing cost centers so every penny is accounted for.
You know, when I read about all this automation, it raised a massive red flag for me regarding the workforce.
Oh.
Well, if the AI is flagging the 20% expense jumps, predicting the cash flow, doing the data entry from physical paper invoices, and automatically allocating overhead costs to the penny, are we looking at the end of human accounting in manufacturing? Does the traditional factory accountant just become obsolete?
It's an understandable fear, but if we connect this to the bigger picture of industrial evolution, it's absolutely an elevation of the role, not an extinction. AI is fantastic at spotting mathematical patterns and doing the grueling heavy lifting of data entry and allocation, but it fundamentally lacks strategic wisdom.
True, it can't read the room in a board meeting, and it certainly can't negotiate with an angry supplier.
Exactly. When the AI flags that 20% spike in electricity, it takes a human accountant to investigate the why. Was it a faulty machine pulling too much power? Did a shift manager leave the equipment running overnight by accident? By automating the repetitive tasks, the ecosystem elevates the human accountant from a data entry clerk to a strategic financial analyst.
They actually get to use their brains.
Yes. They are finally freed up to actually act on the insights the AI provides, making human decisions that optimize the factory floor, rather than just tallying up what already happened.
So the AI is the tool, but the human directs the strategy. And regardless of how advanced the AI and AR technology gets, a physical factory still requires human operators on the floor. It still has to function within very strict, localized legal frameworks.
And managing a modern physical workforce is incredibly complex, especially when you factor in regional labor laws and tax codes.
The APS ecosystem addresses this starting right at the factory gates with GPS attendants. Factory floor workers or field technicians out doing specialized repairs at client sites clock in via their mobile phones. And when they hit the button, the system drops a geolocation pin on a digital map to mathematically verify they're actually on site.
It's a very robust method for preventing timesheet fraud.
Mhm.
You can't have your buddy clock you in while you're still sitting in traffic 5 miles away.
Right. And that location data feeds directly into this massive cross-border payroll module. The system is designed to adapt to local labor laws, taxes, and social insurance frameworks, specifically across Saudi Arabia, Egypt, and the UAE. And one thing it highlights heavily in the sources is strict compliance with the Wage Protection System, or WPS.
Yes, WPS compliance is a massive regulatory framework in the Gulf region. Governments require strict, standardized proof that employees are being paid their contracted salaries on time, in full, through approved financial channels.
Which is great for the workers.
Exactly. And the APS system uses a 12-point automated check to ensure every single payroll file meets government standards before generating the encrypted files for the banks. If there's an error, say a worker's bank routing number is missing, it stops the process and flags it, preventing the company from submitting a flawed file and facing massive government fines.
You know, from a management perspective, the GPS tracking and automated payroll checks are brilliant for preventing fraud and ensuring compliance. But from a worker's perspective, I have to ask, does GPS tracking every clock in cross a line into micromanagement? How does an ecosystem like this balance strict mathematical compliance with actual workplace trust?
This tension is something every modern facility has to navigate. When we talk about an immutable audit trail, which is a core architectural feature of this system, meaning every single action, every location pin, every inventory adjustment is tracked by time and user and absolutely cannot be secretly altered or deleted, it sounds very Big Brother.
Yeah, it sounds like you're working inside a surveillance state.
But transparency works best when it goes both ways.
Yeah.
Yes, the system tracks the worker's location to prevent time theft, but that exact same immutable audit trail protects the worker from exploitation.
Oh, that makes sense.
Right. If a manager tries to unfairly dock their pay or secretly alter their hours after the fact to save on labor costs, the system permanently records who made that change and when. The system guarantees the worker gets paid exactly what they earned, fully compliant with the wage protection system. It replaces the messy he said, she said dynamic with mathematical certainty. The system is an objective referee.
That is a fascinating reframing. The system holds management just as accountable as the floor worker. And that objectivity extends to the factory's relationship with the government, too, because tax codes and manufacturing regulations aren't static. They change constantly.
And falling behind on regulatory changes can shut a factory down faster than a supply chain failure.
Which is why what fascinates me is how it handles those updates. Having a system that uses automated legislation monitoring, a smart scanner that actively looks for new tax and regulatory updates and warns management before they take effect, feels like having a compliance lawyer living inside the software. It also features direct e-invoicing integration.
Yeah, tying directly into government tax authorities is becoming the global standard.
The system connects directly with the Egyptian Tax Authority, the ETA, and Saudi Arabia's ZTCA Phase 2. And for anyone outside those regions, ZCCA Phase 2 requires businesses to generate complex, cryptographically encrypted QR codes on every invoice, instantly transmitting that data to the government. The system even automatically distinguishes between B2B, business to business, and B2C, business to consumer, transactions to format the invoice legally.
And the technical architecture required to handle data this sensitive, from an employee's exact GPS coordinates to cryptographic government tax keys, has to be ironclad. You cannot cut corners on security.
So the system uses multi-tenant isolation to ensure that security. Every single company on the ecosystem gets a fully independent PostgreSQL database.
PostgreSQL is a heavy-duty, highly secure database structure. What multi-tenant isolation means is that your company's highly sensitive financial data isn't sitting in the exact same digital bucket as another company's data. Even though it's a cloud service, your data is structurally walled off, virtually eliminating the chance of cross-contamination or a shared data breach.
That's reassuring. But even though it's a cloud-based web environment, it has a crucial feature for the physical, unpredictable real world, which is offline POS mode or point of sale.
Right, because factories and their attached retail showrooms sometimes lose internet. A fiber optic cable gets cut down the street by a construction crew. You can't just stop selling products or moving inventory because you lost connection to the cloud.
But how does an offline system maintain those strict, encrypted, sequential tax records for the government without the internet? The logic of that seems contradictory.
It's actually a technical marvel. The offline mode essentially caches the cryptographic keys locally. It keeps generating legally compliant encrypted invoices, keeps the assembly line moving, and holds all those transactions in a secure digital waiting room.
Oh, I see.
The second the internet connection is restored, it seamlessly syncs and uploads the queued transactions to the cloud and the government servers, all without duplicating records or breaking the sequential numbering required by law.
Wow. And importantly, for the regions it primarily operates in, the user interface is natively dual language. It supports English and right-to-left Arabic natively, using a specific, highly legible Amiri font, allowing invoices and complex financial reports to be generated in both languages simultaneously on the exact same document without breaking the formatting.
It's a really holistic approach to architecture. It's not just about what the software does in a perfect vacuum. It's about how resilient and adaptable it is in the messy real world of cut internet cables, complex languages, and shifting tax codes.
Bringing it all together, we've followed the journey from the raw materials arriving on the floor and being tracked by the living tree of the Beibom, through the augmented reality glasses scanning the warehouse, into the AI financial brain predicting our cash flow based on landed costs, and finally to the strict legal architecture protecting the whole operation from government fines.
And the central takeaway here is that APS represents a true paradigm shift. Manufacturing is no longer a sequence of isolated, disjointed steps tracked on disconnected spreadsheets by people in separate rooms. It is a single, breathing, neural entity.
A macro event, like a change in global steel supplier costs, instantly ripples through inventory valuation, AI profit analysis, dynamic retail pricing, and tax compliance, all without a human having to manually carry a piece of paper from one department to another.
For anyone in business, the era of looking backwards to see how you did last month is officially over. Success and basic survival now requires these real-time, integrated ecosystems.
Which brings us back to that traditional factory we pictured at the very beginning. The noisy machinery, the isolated clipboards, the accountants totally disconnected from the physical reality of the floor. That image feels like a museum exhibit now. The rearview mirror is gone, we're driving with sensors. But looking at the trajectory of this technology leaves me with one final, slightly provocative thought for us to mull over.
What's that?
If a neural AI ecosystem can monitor physical raw materials with AR glasses, automatically predict cash flow crises before they happen, flawlessly enforce government tax compliance, and instantly rewrite global sales prices based on real-time supply chain fluctuations, at what point does a manufacturing plant effectively run itself? We know the accountant's job evolves into strategy, but will the manufacturing CEO of the future even need to be human? Something to think about.